Commodities are up for the fourth straight day as Fed notes indicate more easing to come. Eurozone flash PMI signal a recession. Markets continue to take everything in stride. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Rutledge, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. And Scott, what a month August is shaping up to be. We're continuing that slow grind upward. This week it's been on gold, silver, and a fresh round of global stimulus speculation.
Yeah, all month long, it feels like each week there's a new pocket of action. First it's high beta, then it's the banks, and then this week, silver had an unbelievable move. We've been waiting and waiting finally for silver to break out of its range, for gold to get going. Then on Monday, finally, silver got some volume. We're like, get in there. Been long on the virtual trade for silver and gold. We're now in day 4, a bit extended. We'll get to that later. But all in all, pleasantly surprised. A lot of traders are having their best month in August, and who would have thunk it? Right,
well, exactly. And even Q3, one of the trends that we've been identifying is the have and the have-nots. And that's what we've seen with like mega cap tech, your Apples, your Googles, your Amazons. We've seen in the fertilizer space. We never thought we'd be talking about that when we started liking it last year. Housing, all these spaces kind of coming out of nowhere, really taking some leadership.
Well, that's why you're getting the market supported. You're getting every different sector involved at different times. And if you look even at the overall S&P, we go to the chart, it's finally Tuesday, the bears had a little bit of something to say. Okay, this is when we broke through this recent range. We went to as high as, 1426. We broke above the highs of the year. There was supposed to be momentum coming in, and what happened? It was a push through failure, an outside day, a day to take notice, a day that I went from about 9 longs to about 3 or 4. But then what happened yesterday? Yesterday we come in, we test this accelerated uptrend. I'm not even talking about the uptrend that started down here on June 4th that we're not even close to. I'm talking about this accelerated uptrend that we've been tracking since August 3rd. Meanwhile, we held it again, and the bears seem to still have no power, as yesterday high beta started to go positive. Things started to move. So at this point, bears still have absolutely no power. If they want to get anything going, they're going to have to break this market and close it below 1406. They do that, maybe we get a test down to 1390, 1395. But if we hover here, we're going to puncture through those highs, and we're actually going to continue. And then, they're going to have a lot of decisions to make.
And we have a relatively quiet day today. We only have jobless claims and new home sales. We're going to talk about housing and housing retail stocks in the trenches. But let's jump into the sector spotlight with the fertilizer name. This has been my 2012 pick. Scott and I have been talking about this consistently since November 2011. The weather drought of 2012 is going to go down as one of the worst weather patterns that we've had in this country and will be a benchmark going forward. Let's kick it off with Mosaic. I love this name even regardless of the drought. Stifel coming out yesterday, taking their target to 72, reinitiating on the name with a buy. And again, talking about the fall and spring applications. So this is becoming a 2013 story as well.
Yeah, well, you said get ready, the third quarter, this is where it's going to be. And then all of a sudden they started to act better at the end of the second quarter. Then lo and behold, we saw a nice reversal pattern in Mosaic. You've been talking 65, they upped you to 72, so that'll get you there quicker. You look at the chart, I still like what I'm seeing. Here is that reversal that we're talking about in late May. Here is the commitment to that reversal, and then ever since it, a methodical move back to this prior resistance. And then as of right now, stock's starting to consolidate. It's trying to hang out up here. You look at the chart, as long as it stays above 55, 56, I think you're going to see, intermediate guys stay there. And then eventually, we get above this 60, we clear this with some power, you're going to get your 65. And then actually, I like this because look at this resistance all the way up here. You're talking $70. So there's a chance it goes above 65 and, gets somewhere in between there and 70.
Well, you also have the share buyback speculation going on into 2013 as well once the Cargill restriction is lifted. So you're going to get a little bit of a bid with that as well. Moving along to Agrium, ticker AGU. This has been another darling in the space as well, up 35% year to date, essentially for the same reasons like a Mosaic.
Yeah, and this one actually is much closer to the highs of the year. It actually went through it. So, you talk about leaders. A lot of guys like to stay with the leaders, besides timing some of the stocks that have been lagging, but you can get those spirited moves off the lows. You look at AGU now, this has had a really big move. We've talked about this one with some of the others we're going to talk about. And this is still following the 8-day moving average, following the 21. Getting a little testy up here. You look, up here at this little area here, you would have thought that this downward potent bar would have dictated some price to the downside, but then what happened? Pow! Negated right there. So at this particular point, anyone shorting this stock has not had any success. People buying the dip, doing well, and it's following this uptrend. It's stay with this thing as long as it stays above the 21-day, and right now it's riding the 8.
Moving along to CF, this one's up 36% for the year. I want to spend some time on this. We had an options profits reader asking Scott to take a look at multiple levels. Again, they are looking for a strong fall application as well, so sort of following along the same thing as an AG and a Mosaic.
Yeah, and this one, every time I talk ags, typically the first two out of my mouth are CF and Monsanto. And CF, though these are all choppy, you know, and it's hard. You have to give these things some space. And if you've trusted CF this entire year, you know, you're multi-year highs and you're doing really well. And lately, again, it's getting a little choppy because people don't know if they could stay with the rally. But if you look here, there's a lot to like. This too, riding the 8-day, coming to the 21-day a few times, still above the 21-day. You take a look here, it's above all this resistance, you know, so this is, you know, flexing its muscles. You look technically what to do short term. Short term, it looks the same like everything else. You had a potent down day yesterday, you know, a little red dog reversal. What's that? That's when it trades through the prior day low of 210.50, goes to the bottom, comes back up, you buy it at that pivot, and you make some nice money. So if you got out up here, you got your re-entry. I think as long as it stays above the 21-day, you're going to see continued momentum in these names.
Right. Moving along to Monsanto, speaking of that stock, they're expecting some nice profit growth out of Brazil, which, you know, fall application, again, is going to be the story there. And that's been a great trading vehicle for us as well.
Yeah. You know, you could time them or you could hold them. And what I'd say is trade them and trail them, because you hold some, you trade some. And this one has been a mover. It's been a leader. You look at the chart. You know, you look here when it cleared this massive, look at this massive resistance. You know, so that was a nice trade right there as it broke above. Then it held above, flagged nicely as a trader. This is what you want to see. You want to see it clear a pivot. It cleared the pivot. And since then, it's been choppy, but you know, if you're a holder of this thing, you're not, you know, looking really at the noise like that. I think saying as long as it stays above 86, you know, you could see another move through highs. At this particular point, 86 support. This starts getting above, you know, 89.45. Come the fourth quarter, you're going to see another move towards 100.
All right, let's wrap it up with another big player in the space, Potash. Again, this is a Brazilian story as well. They're seeing a lot of soil deficiency there. They also have some drought problems, so you're going to see the demand again for that fall application.
Well, I just want to show you how, like, even this one, I used to love this one. It used to lead. It used to be the best in the business, and then all of a sudden it fell apart. And it's just a laggard trade. I've tried to trade it a few times. If you look here, just at the difference between a leader and a laggard, you saw CF, you saw Monsanto, you saw all of them, you know, at the highs through resistance. You know, that would mean it would be up here. Look where this one is. You know, it's struggling still. It's below the moving averages. Out of all of them, not investment quality. You know, it's going to have to start acting much better. You know, traders will have this on the radar. It did have a move off the lows. You know, but so at some point maybe it gets through this big resistance area, but you know, I still think this needs time to prove itself. You know, it's got to really start getting above 45, 46 to start having cleaner action. At this point, you know, you could be long tier one, but that's about it. All
right. Well, we'll definitely keep we'll certainly keep an eye on these names going through the end of the year and certainly into 2013. We're going to jump into a quick commercial, and when we come back, we dive into the trenches.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Come down and expect to have a great time.
Welcome back to the morning call. We're going to dive into the trenches and take a look at another leader of the housing and housing retail space. Stephanie and Kramer really bulled up on these in Action Alerts, plus really loving Toll and Wirehouse. We're going to kick it off and take a look at Toll.
Yeah, Toll came out with numbers yesterday. Very impressive. You know, Mr. Toll himself, he loves touting his stock and touting the group.
He's a great conference call.
Yes, especially if you're long. And you know, it's not really surprising. I did actually a tape or a segment with Kramer. I think 6 months ago we talked about the potential of the housing recovery, how potent the move was, you know, in the beginning of the year, signaling more upside to come. It's been a leader. There's been great stocks, and if you look at the chart of Toll, if you're an investor in Toll, you're doing really well. Look at this trend that's been in place since early December through this entire year. Stock yesterday at highs. It wasn't that big of a deal that it didn't close at highs because every bear in America was trying to sell the report and they couldn't get it down. So now, at this point, I think you've made a lot of money here. here. It's going to take some time to build a new base above this 3250 area, but I see no reason to abandon this stock or this group because it's still, it's still providing leadership.
Well, you're also in an environment where interest rates are so incredibly low and we're seeing inventory turnover, so you can't fight the trend on that one, as we like to say. Let's move along to KBH, another one above multiple key moving averages.
Yeah, this one is not quite at the highs with the way Toll is or Lennar, which has been acting really well. But this one has given you setups, and if you look here at the chart, you'll see there's another setup brewing. Last catch-up type play was right here when it broke above this resistance, right around $9. Then you have this descending channel here, nice little triangle, another entry right there. And here we are above the 8-day, going sideways. I do think you're going to get another trade here. At this point, as long as it stays above 1021, you might get some momentum above 11. Not quite the leader of a Lennar or a Toll, but this one, if you want to own something and tactically as a trader above 11, I think you get some cash flow.
Moving along to Home Depot, obviously benefiting off of the strength of the home builders, reported a great quarter and margins are growing consistently across all of its business lines.
Yep, 2 years ago on CNBC, my retail stock of the year, it continues. So it shows you can be a stock picker, you can trade things more than just an intermediate trend. It all depends on your time frame. And now this one is actually flagging for another trade for actual traders. Okay, this was the last particular gap and go. Remember, it gapped up, couldn't even attempt to fill the gap, continued. Now we've been consolidating for about 4 days. So at this point, if you're an investor, there's a lot to like as a trader. These high-level flags are hard to sink your teeth into, but there's no reason why above 57 you can't just catch it for a quick cash flow trade as an investor. You've been enjoying a really, really, really nice ride. Look at this, pow.
Right. Looks great. Let's wrap it up with Williams-Sonoma. This is a real leader in the space, up 40% year over year, while the S&P retail index is up only 37%. So we're really identifying some strength with this name.
Yeah, and this one had a huge gap up yesterday.
Right, great quarter.
So that's why I guess, like you guys, it's a great formula. You guys do the Action Alert Plus, so you're holding things that you like fundamentally. You hold some, and then when technically it starts to go, you add to it. And something like this, you really didn't see coming, because if you look at the chart, look here at what's going on, like kind of messy, like no real follow through, just up, down, up, down, up, down. And then finally, the company came out and delivered, and pow. So now at this particular point, it's giving investors a lot of warmth and comfort. For those who stayed the course, it's now above this resistance, and it closed near the highs of the day. I wouldn't chase it here as an investor, but at this point, I think, we talk about pro gaps. As long as this pro gap stays intact, you're going to see a powerful move. But as a trader, I think you just have to wait for a setup there.
Well, that's one of the great things about doing this in conjunction with you guys, is that we learn how to trade fundamentally and technically, so we can trade in short, long-term, intermediate trends, and I think that's what's really great about what we do.
And create alpha, not be one of the 11% that is not performing with the S&P and the NASDAQ.
Yeah, I don't trust the market. I'm not going to get any money out of it. Well, I don't know, 12% to go. Anyway, let's move along to quick hits for quick cash. We've got a ton of names to get through here this morning. Let's kick it off with Apple, our favorite name to trade here at T3.
Yes, and rightly so. This month it's been unbelievable. We even were to time a cute short 2 days ago. So yesterday, market wasn't sure. Will we pull back to 644? Will we go even further? So we put our tactical strategies on the play. I'm like, this is what you do. Watch yesterday's low or the prior day's low as a pivot. If we go below and come back above, don't think about it, buy it, use a stop. And if you did that, you look at the chart here, you're up about 22 points in a day, besides the move it had. So, you look at the run that it had here. We talked about the different pivots to buy. I'm not going to get into it. Then finally, you had a reason to get out. A reason to get out right here as it broke above and then closed near the low, so we weren't sure what would happen here. Would it be like this when it just rolled over and continued going down? Or would it be like this outside day that gave you a nice red dog reversal and then just continued to new highs? So as of right now, yesterday your entry that we listed, we tweeted, was 650.33. Went below, shook some more people out, closed strong. I got long for like 10 points during the day, then I got long at the close. It's up like $3. I hope it doesn't break above 674.88. I'd like to see a little bit more sideways action, but then once we take that out, you're on your road to 700. The stock rewards everyone on all time frames, and it shows that
long, short,
you can be in the right place, right time, and equity markets work.
Yes, they do. Moving along to Google, another one. Hey, look, when Facebook goes down, this one just continues to climb up, and I wonder if it is really signifying that they are the leaders in this space when it comes to ad sales, and they're just, that's it. Almost like Apple. They own it. Hello, 2 iPhones on the desk.
I know, my iPad's in the back. But anyway, this stock ever since earnings this quarter has acted much better.
Yep.
You know, there's time and place to be in these type of things, and you know, it gapped up on earnings, and I've talked about 3 different prices to buy it. Right now, it's at highs of the year. I think it goes through the all-time highs from the monthly and weekly chart at some point. Could be 3 months, 6 months, but that 747 will be taken out. So if you're a macro investor, you stay the course. As an intermediate trend trader, you know, this was your gap up. This was when you finally saw some commitment to Google. So that's why I listed 620 as your buy. Then you had a pivot here, and then this was the pivot that traders like me got on for a nice fast money move around 650, went all the way back to the highs of the year. Now we're hovering right there, hovering above. You know, it's definitely not the easiest to trade, but at this point it closed near the highs and it can continue. You go to your monthly chart, this stock made its all-time high back in 2007, almost 5 years ago. That was when all it had is search, and now there's about 4 or 5 businesses that they make a lot of money with and their valuation is cheap. Ignore the price. So I do think we take this out. It's just a matter of time. Look at the monthly chart coming above this prior resistance. I think it's on its way.
Moving along to IBM, we're going to get a little fundamental with this one. I love this name. I spoke about it on TV on Monday night. Even at these levels, I still think it makes sense to hold on as a core portfolio, holding up 14% year to date, 46% year over year. They took up their dividend 13% just in last year alone. You're not going to get fired for holding this in your portfolio. I still see another 12.5% to 225, and as history dictates, there is some share splits after it gets over 200. So that'll be something else you might want to think about in the back of your head as well.
All right.
Love this name.
There you
Love
go.
it.
Let's go to the next one because I'm not going to argue with you.
Oh, GLD and SLV.
Yes.
Those have been the 2 key drivers this week. So let's take a look at GLD.
Yes, there you go. SLV I'm going to go with first because it was the head dog here. Usually silver wags the tail of the metals dog, and this didn't happen this way. You look at this ignition on Monday. You know, this is what the good book says to do. Wasn't sure if it would be real this time, but you know what? It traded above this level we talked about on Twitter a few times, obviously on my virtual trade for 27.45, and pow. I think I got along about a feeler here, went to a tier 2 right on this move, and then you had a nice gap up and then follow through yesterday. Now it's gapping up again. But for me, I will be selling into this gap up here. I will not get excited because you're going to see on TV today, every person is going to be talking about gold and silver, silver and gold. Meanwhile, the right entry is when we got involved on the virtual floor on Monday. Here's where you trim. Even if it can go higher, I do think that's the more prudent thing to do. And if you go with gold that actually didn't go, because look what happened on Monday, it just perked up coming into resistance. So I got involved with gold also on that day. Lo and behold, finally, nice breakout above this prior high here around 59, closed at 160.84. You know, it's got a lot of room to 164, but if you did not buy it on this day and you did not buy it the last 2 days to be a buyer above 161, I think you have to, bear with some shaking around because the market likes to punish chasers, and on day 4, it's never an easy entry.
All right, I'm throwing one more in there. Duncan, one of the OP readers, tweeted me as I'm walking over, and they want you to show them some levels. So can you have Scott take a look at Duncan for us? So
with these type of things, you have to know your time frame.
Right.
Okay, and it acted unbelievable. Went through 28, went through 32, went to highs, and then it started to act a little faulty ever since they sold it on earnings. So I talked about it on Twitter. We put it off the charts. I said if you don't have commitment to Duncan, because we could trade these things, this is a level that should not break. And if you look at the chart, you know, this was right here. This was their last breakout, right around 34, went as high as 37. Okay, and then you kind of had a breakout failure, but you know, you never want to see such a potent down move after that, so that gave you a little bit of a red flag. Then really, you know, people were like, what do I do with Duncan? I said, if we break and close below this 33.50 area, you probably want to get out, and we'll figure it out, you know, next time around. You also, you know, take a look here at trends. You know, ever since this trend that was put in place from this area, you know, it broke right there also. So technically, yes, macro-wise, a few years from now, could it be 40? Yeah, but if you don't want to sit through what could be very choppy downside type action, you look at the technicals, and right here is a key spot. And then what happened? Okay, it actually flagged lower, couldn't even reclaim that, and then you look at another support right here. So if you missed this sell at 33 and change, once it broke even bigger support right here around 31, that was your way out. You know, so if you miss those way outs, you know, selling it once it breaks the 200-day is always a little late. You know, typically what you want to do is you want to see it reclaim the 200-day. So in the next few sessions, if it reclaims the 200-day, maybe you get in. But for right now, it's still under pressure, and you know, it's an avoid. I'll look for some type of red dog reversal where it trades down, comes back up, gives us a new entry. Tried to do it here, but it didn't amount to much. We'll look for another one. At this particular point, it's still pressured. If you didn't use these sell signals and you're still in there, you know, at this point, you have a bigger time frame than most guys.
Right. Well, we'll continue to take a look at that one because breakout stocks. We're buying that one over there at the street right now. Anyway.
They're buying Dunkin' today?
They are. Actually, I think they bought it on Monday or Tuesday. There was a little bit of a dip. There was some sort of, I don't know, some kind of speculation or franchise, whatever. Anyway, catch Scott at the end of the day, every day as he wraps up the charts for us on Options, Profits, Real Money Pro, and T3Live.com. Have a great week, everyone.